Let's get a check on what else is happening in the markets now. There's so much to discuss, and I was joined by Tredas' Doug Simon on Wednesday to talk grains and the latest WASDE report. Those are just a couple things, though. We started by talking about what continues to make news in the cattle markets.
Because we've got these bigger packing plants, we've got this kind of bottleneck where you got, basically all this, beef and poultry and trying to make it through these packing plants that are highly dependent on people, showing up. And we've got a, big, that fire that we had last year in September down in Kansas showed how fragile the meat packing industry, because we're running like 98% of capacity. Well, this has shown us how fragile we are in another aspect of it, because you can't robotize meat packing. You can robotize like pallet plants or auto manufacturing plants. So it showed us how sensitive we are. The good news is that the pork plants have come back on. They're still running slow. Obviously, Nebraska cases of coronavirus have been increasing, unfortunately. We're definitely running things at a much slower pace, but we definitely need to figure out where we're fragile and what we need to get over that and be better. And I think this whole thing is definitely showing us where our weaknesses are. But a lot of things we can do to get better there.
Oh, yeah. And want to get into the WASDE report as well that came out this week. First off, the changes in ethanol production continue to make news. What are we seeing in terms of demand there?
Well, the big deal, production-wise, they kept the acres the same as the March report, which we knew they were going to do that. And the yields are using kind of a normal type of weather yield on that. So the big question would be, I think, demand, like you said. Ethanol side of it, today we had, reports. I mean, our actual ethanol stocks are down about 10% from where they were here just, in the last week or two. That's encouraging. Ethanol margins have actually, we were losing maybe $1 a gallon, earlier. Now we're maybe losing 30 cents, which is kind of on par with where margins were last year. So, USDA in some regards, with the lack of driving and the use of, oil, we've actually, yesterday in their report, they didn't drop ethanol as much as maybe some of the other industry analysts had expected. And they actually increased the feed side of it, and they actually increased the exports a little bit. And as poor as exports are, kind of surprised they increased that demand side on that. And they weren't maybe as aggressive, cutting, feed use as what they could have been. So all in all, that report yesterday, our carryout was, close to 2 billion. People were expecting it to be about 2.2 billion for this, crop that's everybody's marketing right now. So those numbers weren't nearly as negative as what they thought. And then that all carried into next year. Instead of being the 3.4 or 3.5 billion bushel carryover for next year on corn, we came in at about 3.2. So those numbers were about 100 million bushels less than what the guess was. So all in all, corn had a fairly decent day. Didn't have nearly a negative number there is what it could have been.
And you also mentioned feed demand. Anything else you're tracking on that front?
One of the earlier market journals we did, I talked about how low the feed use they had, and they actually came back and adjusted that in the last couple of WASDEs and boosted up feed demand. But they have those numbers for this year at 5.7 billion bushels of feed demand, which is good. They've actually got that growing to about 6 billion for next year. So they do have a pretty aggressive increase in feed use on the corn side, which is important. And on the export side, they do have that actually growing by almost 300 million bushels as well. So they've got, even though they got big production numbers, they got pretty, I think, decent increase in demand, given the bigger production we're going to have for next year.
And let's switch gears to soybeans for a second. We had a story on the show last week about some ways that cattle producers can feed their animals since we've got a lower supply of distillers grains due to the less ethanol demand. So would soybeans be an alternative feed option, and what market impacts would that have?
I've had quite a few cattle guys that have been looking for alternative sources to the DDGs. Valera has a sweet bran product, and given the fact that they're continuing to produce ethanol up there and other co-products, they've been able to keep providing their sweet bran. But like ADM, with them slowing down and their synergy products, a lot of other producers have been looking for alternative protein, whether it's soy meal or urea. They've been looking around doing different things in the rations. But there's a limit to that. I mean, one packer or one farm or one feedlot said that they basically haven't used soy meal for 30 years. I had to think back to that. You had the big growth in ethanol back, starting in 2014 or 2004 and 2005, some of these dry mills, but actually Blair and Columbus have been around for 30 years. So some of these guys haven't used soy meal for a long, long time. So it was interesting to see.
And finally, Doug, anything that you'd like to mention that we didn't talk about today as far as maybe advice when it comes to making sales, risk management, anything else?
Well, I think one of the things we talked about too a little bit in the past was the ARC County or the PLC program. And when we've spent a lot of time with our farmers going through those PLC bases and those PLC production or the PLC yields, try to figure out what their PLC production is you're going to get a payment on 85% of that production. And it's actually pretty substantial. It's essentially a 370 cash price or 382 if you use some of the NAS numbers and look at what the future price would be, and about 880 on the futures on the beans, or about 840 cash price. So you have a free put from the government. It's different than the old LDP days where you used to take it at harvest. Now you have to look at the forthcoming marketing year. So trying to put that into play, there's some real practical aspects that we've been working with our farmers on to help them understand that, but understanding what that support is